Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SINO Land Annual Report. SINO Land Company Limited offers a diverse range of businesses and services, including property sales, property rental, hotel operations, investments in securities and financing, property management, and other services, cleaning services, building construction and management, financing services, administration services, security services, mortgage loan financing, secretarial services, project management, securities investment consultancy services, deposit placing services, real estate agency services, trustee-related services. The company operates in various locations, including mainland China, Hong Kong, Singapore, and Sydney. And the recent surge in SINO Land's stock price can be attributed to a combination of factors that have contributed to a sustained rally over the past year. While no single news event triggered a significant increase, several positive developments have likely influenced investor sentiment and driven the upward trend. SINO Land's achievement of the highest AAA rating in the Hang Seng Corporate Sustainability Index Series in September 2025 has boosted confidence among investors. Analysts' predictions of a 3–5% increase in home prices by 2026, favoring developers like SINO Land, have also contributed to the positive outlook. Furthermore, insider buying activity, including Chairman and CEO Chi Seong-ng's purchase of $50 million worth of shares, signals optimism among company leaders. Consistent dividend declarations have also appealed to investors, providing a stable return on investment. While recent financial results indicate a decline in net profit and lower rental income, these factors do not appear to have directly contributed to the significant stock price increase. Instead, it seems that SINO Land's sustained positive performance over time has driven its stock price up by over 25.25% in the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the positive side, property sales have been a significant contributor to revenue growth, with year-over-year increases of 61.9% and total sales reaching $10,813 million. Hotel operations have also shown encouraging signs of recovery in Hong Kong's tourism sector. Additionally, rental services have experienced a 9.4% increase in mainland China and Hong Kong. On the other hand, revenue decline has been driven by property rental, which saw a year-over-year decrease of 19.9%. Hotel operations have also declined, with an 8.5% drop in revenue. Furthermore, investments in securities and financing have experienced a significant decline of 80% year-over-year. These factors highlight the importance of diversifying revenue streams to mitigate risks and ensure sustainable growth. Net income and profit margins overview. The company's net income experienced a significant increase, rising from $16 million in 2025 to $118 million in 2026. This growth continued over the next 2 years, with the net income remaining stable at $118 million for both 2027 and 2028. Profit margins also underwent notable changes during this period. Initially, they ranged between approximately 5% to 25%. However, no specific changes were mentioned in the extracted summaries. The company's financial performance indicates that it is generating positive operating cash flow. Despite experiencing negative cash generated from operations in 2024, $12,419 million, and 2025, $10,319 million, the company has reported positive operating cash flow of $4,528 million in 2025 and $1,905 million in 2024, page 139. Additionally, the operating cash flow is $6,342 million in 2025, further confirming a positive trend. The company's debt level has undergone significant changes. Notably, the amount of bank borrowings due within 1 year has increased substantially, rising from $0 to $1,799 million. Conversely, the total bank borrowings due after 1 year have decreased significantly, dropping from $132 million to 0. In terms of interest expenses, there is a slight decrease in interest and other finance costs on bank borrowings, down from $52 million to $39 million. However, the amount of borrowings with variable rate interest has increased by $13 million, rising from $1,799 million to $1,812 million. Overall, while some aspects of the company's debt level have decreased, others have increased significantly, indicating a shift in the company's financial position. The company's financial performance varied across different segments and regions in the recent period. Notably, property sales were a standout performer, recording significant year-over-year increases of 18.8% and 61.9%. Hotel operations also showed some growth, with an 11.6% increase, although this was partially offset by a decline from 10% to 8.5%. On the other hand, investments in securities and financing suffered a decrease of 1.9% and 1%, indicating poor performance in these areas. Property rental and property management services also underperformed, with declines of 33.6% and 17.3% respectively. Overall, while some segments showed improvement, others struggled to keep pace, highlighting the need for targeted strategies to address these disparities. Management's outlook on company strategy. The company's management emphasizes its commitment to sustainability across all business aspects. They aim to reduce greenhouse gas emissions in line with the Paris Agreement and foster a sustainable mindset among colleagues. A long-term strategy is being formulated, focusing on three interconnected pillars: green living, innovative design, and community spirit. Management is investing in property, plant, and equipment, indicating an expansion or growth strategy. The company has diversified operations across 6 segments, with a significant increase in investment properties. They are also focusing on property sales and rental services. The company's commitment to sustainability and innovation is evident through various recognitions and achievements in ESG ratings, green living initiatives, and innovative design. Management is enhancing sustainable performance through certifications such as BEAM Plus and Zero Carbon Ready Building certification. The company has a history of paying dividends to its shareholders. Specifically, in the past year, it recognized distributions totaling $5,071 million. Additionally, the company paid out significant amounts for dividends in 2023 and 2024, including $514 million for the final dividend in 2023, $280 million for the interim dividend in 2024, and $719 million for the final dividend in 2024. However, there is no clear indication of share buybacks by the company. That concludes the financial summary for SINO Land. Feel free to comment below, and I will be happy to answer them when possible.